Mayuresh Joshi is with us on the show now. Mayuresh, just a while back, we had numbers from UPL and on expected lines, it's been a very, very weak set of numbers. I think the profits are down more than 80%. The company slashed its revenue EBITDA target, but we were anticipating weak numbers. Globally, companies have been bringing down their forecasts because they're sitting on high cost inventory, which will take some time to run off. But is this a good time, this downturn that we are seeing in agrochemical companies, is it a good time to accumulate?
Afternoon, Reba. No, I think it is going to take some time. I think generally for the chemical space as well as the agrochemical space, because what you're probably seeing or expected to see is weak demand is probably getting played out in terms of the end product pricing. Obviously, input costs have come down, but the end product prices have come down even further, which is probably the reason why you're probably seeing the kind of cuts that are coming through for most chemical/agrochemical players. The second aspect is also the inventory destocking that is probably happening across regions at this point of time. And because of that, you're probably expected to see a lot of negative operating leverage play out on balance sheet. So yeah, extremely disappointing in terms of the guidance cut that UPL has probably given. With the El Nino conditions expected to now play out, my own sense is that the first half is an absolute washout. Second half recovery really depends on a lot of factors at play. And therefore, I think on our own lens, it trades well below all pivot levels. We would watch out for management commentary, but would largely give it a miss looking at Q1 numbers.
By the way, today is a really strong PSU day. Then this move is cutting across sectors. On the large cap screen, it's obviously ONGC, Power Grid. We're discussing NTPC. Beyond the index, I mean, look at even smaller names like a Hindustan Copper, NBCC, Shipping Corporation of India. So it's a big move on a lot of PSU stocks today. Some interesting buying taking place. Mayuresh, hi, good afternoon. What's your favorite PSU pick? One or two if you have any?
Afternoon, Surabhi. So I think PSU banks is something that we are liking at MarketSmith India. One of the stocks within the space is Bank of Maharashtra. And the reason why we like it is because both on a year-on-year as well as on a quarter-on-quarter basis, the stock has given a fabulous performance. If you look at the NII growth, there is a 7% quarter-on-quarter growth to almost 2,350 odd crores. Annualized credit costs have actually come down 2 bips, 1.25%. If you probably look at the cost-to-income ratios, they stay at 37 odd percent compared to 38 odd percent. Asset quality pressures have come down. GNPA is at 2.28 versus 2.5%. Net NPA is at 0.24 versus 0.25. And therefore, the restructured book, which is a construct in terms of how the balance sheet will look like going forward, stays at 2.15% with the management expecting to get it below 2% as well. Capital raise, Surabhi, is the only thing which probably plagues a few of these mid-cap PSU banks. But to a certain extent, they have a runaway growth ahead of them. So I think Bank of Maharashtra is something that we'll continue to like. Within the same space, in the PSU undertaking basket, I think Bank of Baroda is the other stock that we probably like out of the universe. Numbers are expected to be reasonable over the next couple of years. And with the expectations in terms of the SME to book, expected to stay at around 0.65 times. And even with the new ECL norms that are expected to come through, a lot of provisioning on the standard plus restructured book has already probably happened at this juncture, which probably gives them a leeway for good growth. Out of the others, I think stocks like NTPC, Power Grid can definitely be held on. I think both in terms of the aspects of earnings growth and a good dividend yield which suffers.
Got that. Mayuresh, any thoughts on names like Sula? It's up about 5.5% today. Sula Vineyards.
So after Prashant, I think the numbers were quite reasonable. The other aspect in terms of both the wine tourism aspect is expected to grow at a very, very reasonable pace. Again, they've got a very, very niche kind of a offering into the market when it comes to wines, both in terms of the B2C as well as the B2B part of the business. And therefore, the expectations in terms of volume growth should sustain going forward. Management sounds, Prashant, very, very hopeful in terms of maintaining margins in those high 20s. And therefore, how will they manage that is something that I probably need to figure out over the next few quarters, and the street as well. If they're able to do that, my own sense is that operating leverage plays onto their balance sheet. Obviously, I think valuations are not cheap any longer. I think it has moved substantially over the past few months. And therefore, anybody holding can definitely hold on. Any fresh investments definitely need to pull back.
Okay, got it. Thanks very much, Mayuresh. Appreciate you joining in. Thanks, as always, for being here on CNBC TV18.